The emergency call comes at 2:30 p.m., demanding Sugar Ray Robinson's immediate attention. His business manager, voice tight with panic. "Ray, we need that bank loan approved today, or we lose the Detroit property deal." Robinson straightens his tie, grabs his financial documents, and drives to First National Bank of Detroit. But when loan manager Harold Patterson examines his application and declares, "Risk assessment is negative," what happens in the next 3 hours doesn't just secure one business loan. It exposes how American banking rations opportunity based on race, not creditworthiness. First National Bank of Detroit stands on Woodward Avenue like a fortress of financial power, its limestone columns and bronze doors announcing institutional authority that has shaped the city's economic landscape for over a century. Inside, marble floors echo with the footsteps of automotive executives securing expansion loans, real estate developers financing new subdivisions, and established families managing generational wealth. This is where Detroit's money flows, where economic futures get decided, where your creditworthiness determines your access to the American dream. The morning had started with promise for Robinson. At 47 years old, he commanded respect as former welterweight champion, successful businessman, and influential member of Detroit's growing black middle class. His investments included nightclubs, restaurants, and real estate properties across the city. His financial portfolio showed steady income, appreciating assets, and careful money management that impressed even conservative accountants. But today's emergency loan request carried unusual urgency. A prime commercial property in downtown Detroit had become available, a 3-story building perfect for Robinson's planned expansion into retail clothing stores. The seller demanded quick closing, cash payment, and proof of serious intent. Robinson needed $75,000 immediately, secured against his existing properties and guaranteed by his proven business record. Robinson's relationship with First National Bank stretched back 6 years when he opened his first business account after moving to Detroit. He'd maintained excellent credit, never missed a payment, and gradually built the kind of financial reputation that typically ensured loan approval for qualified applicants. His account balance consistently exceeded $20,000, his monthly deposits reflected stable income, and his business relationships demonstrated community integration. The bank lobby bustles with Tuesday afternoon activity. Well-dressed customers conduct business at mahogany desks, their conversations focused on mortgage refinancing, investment portfolios, and commercial lending that fuels Detroit's economic expansion. Loan officers in conservative suits review applications, assess collateral, and make decisions that can launch businesses or destroy dreams with equal efficiency. Robinson approaches the receptionist with the confidence of an established customer requesting routine financial service. "Good afternoon," he says politely. "I have an appointment with Mr. Patterson regarding a commercial loan application. Sugar Ray Robinson." The receptionist, a young white woman named Susan Morrison, checks her appointment book with practiced efficiency. "Mr. Robinson, yes, 3 p.m. appointment for commercial lending review. Mr. Patterson is expecting you. Please have a seat and he'll be with you shortly." The wait gives Robinson time to organize his documentation, property appraisals, income statements, business licenses, bank records, and character references from prominent Detroit citizens who can vouch for his financial responsibility and community standing. Everything a serious loan applicant should present to demonstrate creditworthiness and repayment capability. Can you imagine Robinson's confidence walking into that banking institution? A successful businessman expecting routine financial accommodation based on 6 years of excellent customer relationship and demonstrable ability to repay commercial loans. Harold Patterson emerges from his office at 3:05 p.m., a thin man in his early 50s, wearing wire-rimmed glasses and a gray suit that speaks to conservative financial values. 25 years with First National Bank, expert in commercial lending,
specialist in assessing business loan applications for creditworthiness and institutional risk. His office walls display certificates from banking associations, photographs with Detroit's business leaders, and awards recognizing loan portfolio performance. "Mr. Robinson," Patterson says with professional courtesy, "please come in. I understand you're interested in commercial financing for property acquisition." "Yes, Mr. Patterson," Robinson responds, settling into the leather chair across from Patterson's desk. "I need $75,000 commercial loan secured against my existing properties for downtown retail space acquisition. I've brought complete financial documentation for your review." Robinson presents his loan application package with the thoroughness of someone accustomed to business dealings requiring detailed documentation. Property values, income verification, business plans, and character references create a comprehensive picture of financial responsibility and repayment capability. Patterson examines the documentation with the careful attention commercial lending requires. Robinson's financial position appears solid: multiple income sources, appreciating real estate holdings, established business relationships, and banking history showing consistent deposits and timely payment of financial obligations. But something in Patterson's demeanor suggests hesitation that transcends normal loan evaluation procedures. His examination extends beyond routine credit assessment, focusing on factors that don't appear directly related to Robinson's ability to repay commercial loans. Picture the financial calculation happening at that mahogany desk. Legitimate loan application from creditworthy borrower versus institutional policies about extending commercial credit to Black business owners whose success challenges traditional assumptions about economic capability. "Mr. Robinson," Patterson says after lengthy documentation review, "your financial position appears interesting. Multiple business ventures, entertainment industry connections, real estate investments, but commercial lending requires careful risk assessment that considers factors beyond immediate financial capability." Risk assessment, factors beyond financial capability, the banking language that introduces considerations not directly related to creditworthiness or loan repayment probability. What Patterson doesn't realize is that he's not just evaluating a loan application, he's gatekeeping access to commercial credit based on racial assumptions about business reliability that contradict objective financial evidence of Robinson's creditworthiness. "Mr. Patterson," Robinson responds with business-like directness, "I understand risk assessment. My application includes property appraisals totaling $120,000, securing a $75,000 loan, 60% loan-to-value ratio. My income documentation shows ability to service debt payments. My banking history demonstrates financial reliability. What additional risk factors concern you?" The direct challenge forces Patterson to articulate concerns based on objective lending criteria, rather than subjective judgments about Robinson's suitability for commercial credit access. Usually, Black loan applicants faced with institutional hesitation simply accept rejection rather than demanding explicit justification based on standard banking practices. But Robinson understands commercial lending, has prepared his application according to banking industry standards, and expects treatment consistent with his customer relationship and financial qualifications. Can you feel the institutional weight settling over that banking office? One citizen seeking commercial credit, while financial institutions apply different standards to different applicants based on racial considerations rather than creditworthiness. "Sir," Patterson continues, "commercial lending involves institutional relationships, community integration, business environment assessment. Your entertainment industry background, your demographic profile, create circumstances that require additional evaluation before we can approve substantial commercial loans. Institutional relationships, demographic profile, the banking language that transforms racial bias into lending policy concerns that appear legitimate while discriminating based on factors unrelated to loan repayment capability." "Mr. Patterson," Robinson says, his voice gaining authority. Demographic profile and entertainment industry background don't affect my ability to repay commercial loans. I've provided documentation proving creditworthiness according to standard banking criteria. Are you suggesting that First National Bank applies different lending standards to different customers based on race? The direct challenge forces Patterson to confront the discriminatory nature of his evaluation process. He must cite specific banking regulations that justify different treatment or acknowledge that his concerns aren't based on legitimate lending criteria. But before Patterson can respond, the situation becomes more complicated. William Ford, Jr., son of the automotive dynasty and member of First National's board of directors, enters Patterson's office during his routine review of commercial.
Harold, Ford says with board-level authority, I hope we're taking good care of Mr. Robinson. He's been an excellent customer and important community leader. Ford's presence immediately shifts the power dynamic from loan officer discretion to institutional oversight that prioritizes customer relationships and community standing over administrative prejudices that can create legal liability for discriminatory lending practices. Can you imagine the relief Robinson feels when a senior bank official who understands business relationships intervenes in what appeared to be discriminatory loan evaluation? Mr. Ford, Patterson stammers, we're conducting standard risk assessment for Mr. Robinson's commercial loan application. Due diligence requires careful evaluation of all factors affecting institutional exposure. Of course, Ford responds, and Mr. Robinson's 6-year banking relationship, excellent credit history, and substantial collateral make this a straightforward commercial lending decision. What concerns remain? Ford's question puts Patterson in the position of defending loan denial to a board member who recognizes Robinson's qualifications and understands the legal risks of discriminatory lending practices that violate federal fair lending laws. Sir, says Patterson, trying to maintain his position, commercial lending requires assessment of business environment, community acceptance, market conditions that might affect loan performance. Harold, Ford says with barely concealed criticism, Mr. Robinson's businesses have operated successfully in Detroit for years. His market knowledge exceeds that of most applicants. His community acceptance is demonstrated by his customer relationships. What specific business environment concerns justify denying this loan? The board-level challenge eliminates Patterson's administrative authority to deny loans based on subjective judgments rather than objective banking criteria. What happens next demonstrates how institutional authority can overcome discriminatory practices when senior officials prioritize business relationships and legal compliance over administrative prejudices that can create legal liability for discriminatory lending practices. Mr. Robinson, Ford says with business authority that transcends loan officer discretion, your application meets all our commercial lending criteria. We'll approve the $75,000 with standard terms, 6% interest, 5-year amortization, secured by your properties as collateral. The loan approval from board-level authority eliminates Patterson's objections through proper application of banking standards rather than discriminatory evaluation procedures. But Ford's intervention extends beyond resolving Robinson's individual loan application. He uses this incident to address broader patterns of discriminatory lending that have been reported at First National Bank branches serving Detroit's growing black middle class. Harold, Ford continues with supervisory authority, commercial lending decisions must be based on creditworthiness and collateral, not demographic considerations that violate federal fair lending laws. Mr. Robinson's application should have been approved immediately based on his financial qualifications. The professional correction establishes legal rather than discriminatory criteria for commercial lending decisions, ensuring equal treatment for qualified applicants, regardless of race. Robinson signs the documents immediately, securing the $75,000 needed for his property acquisition. The paperwork takes 30 minutes, but the implications extend far beyond his individual business transaction.
The successful loan approval validates Robinson's business acumen and financial management, while demonstrating that discriminatory lending practices can be overcome through proper application of banking standards and senior management oversight. Ford files formal report about Patterson's discriminatory evaluation procedures, creating documentation for improving bank training programs about fair lending compliance and proper application of commercial credit criteria. Federal banking regulators begin investigating First National Bank's commercial lending practices after Ford's report identifies patterns of discriminatory evaluation that violate fair lending laws and create legal liability for the institution. Civil rights organizations use Robinson's experience as model for challenging discriminatory lending practices in federal court, arguing that subjective risk assessment violates constitutional guarantees of equal treatment in commercial credit access. The Detroit Urban League begins monitoring commercial lending patterns at major banks, documenting disparities in loan approval rates between white and black applicants with comparable creditworthiness and collateral. Legal advocacy groups establish lending discrimination documentation programs that use Robinson's case as template for identifying and challenging banking practices that deny commercial credit based on demographic considerations rather than financial qualifications. Progressive banks across Michigan begin implementing standardized commercial lending criteria that ensure equal evaluation of all applicants based on creditworthiness and collateral rather than demographic considerations that can create discriminatory outcomes. The psychological impact on Detroit's black business community proves significant when Robinson's successful loan challenge demonstrates that discriminatory lending practices can be overcome through persistence and strategic use of institutional oversight mechanisms. Banking industry training programs incorporate Robinson's case as example of how discriminatory lending can create legal liability, requiring objective application of credit standards rather than subjective evaluation based on demographic assumptions. The broader economic impact creates lasting precedent for equal commercial credit access through proper application of banking law rather than discriminatory interpretation of risk assessment that can limit business development opportunities. Academic institutions begin including Robinson's lending case in business school curricula, teaching students about discriminatory practices and legal requirements for equal treatment in commercial finance. Corporate diversity programs begin incorporating fair lending education that uses Robinson's experience to demonstrate ongoing relevance of equal opportunity principles in financial services. Community organizing efforts gain momentum when Robinson's successful lending challenge proves that individual business owners can effectively challenge discriminatory practices through knowledge of legal rights and strategic use of institutional oversight mechanisms.
Federal agencies responsible for fair lending enforcement use Robinson's case as model for identifying and investigating discriminatory commercial lending practices that operate through subjective evaluation rather than objective credit criteria. The institutional changes resulting from Robinson's challenge create stronger protections for all commercial loan applicants by establishing clear standards for credit evaluation that prevent discriminatory assessment while maintaining legitimate lending criteria. Media coverage of Robinson's lending rights challenge creates broader public awareness of how discriminatory credit evaluation can prevent qualified business owners from accessing commercial loans, generating support for financial reform that prioritizes creditworthiness over demographic considerations. International business observers studying American commercial finance reference Robinson's experience as example of how discriminatory lending practices can undermine economic development and require active enforcement of fair lending laws to ensure equal opportunity. Years later, when commercial lending faces new challenges from changing evaluation procedures and credit requirements, Robinson's 1962 experience provides historical precedent for protecting equal access to business financing through proper application of banking standards.
The legacy of Robinson's lending rights struggle continues influencing banking policy decades later, as his experience becomes foundational case study for understanding how individual courage can protect commercial credit access against institutional barriers. Legal scholars continue referencing the Robinson lending precedent in contemporary discussions about commercial credit discrimination and the importance of objective evaluation criteria that prevent discriminatory assessment based on demographic rather than financial considerations. Robinson understood something powerful during those 3 hours at First National Bank. Sometimes the most important fights aren't in boxing rings or nightclub businesses. They're in banking offices, where commercial credit gets rationed by racial policies rather than creditworthiness. The victory wasn't just about securing one business loan. It was about proving that commercial credit access requires equal evaluation for all qualified applicants when banking institutions prioritize financial criteria over demographic discrimination. Think about commercial lending in your community. Banking institutions, loan evaluation procedures, credit assessment policies that claim financial prudence while creating barriers for qualified applicants based on demographic assumptions rather than creditworthiness. Because 3 hours of defending commercial credit rights can strengthen banking institutions forever, can prove that financial markets depend on equal access rather than discriminatory evaluation that undermines business development opportunities. Robinson proved that American commercial finance belongs to everyone qualified to participate when banking officials choose objective criteria over discriminatory assessment that threatens economic opportunity for all citizens. The downtown property acquisition moves forward immediately after Robinson secures his loan approval. The 3-story building on Grand River Avenue becomes the flagship location for Sugar Ray's Sportswear, a retail clothing store that combines Robinson's celebrity status with his business acumen and understanding of Detroit's changing demographics. The store opening 6 months later draws crowds of admirers, customers, and media attention that validates Robinson's business expansion strategy. Local newspapers feature articles about the successful athlete who parlayed boxing fame into legitimate business success, demonstrating economic mobility and entrepreneurial achievement. But Robinson's commercial success extends beyond individual achievement to broader implications for Black business development in Detroit's rapidly changing economic landscape. His retail operation employs 15 people, provides quality merchandise to underserved communities, and generates tax revenue that benefits the entire city. The store becomes a gathering place for Detroit's Black middle class, offering not just clothing, but social space where successful professionals can network, share business opportunities, and build economic relationships that strengthen community development and political influence. Young Black entrepreneurs begin visiting Robinson's store, seeking advice about business development, commercial lending, and strategies for overcoming institutional barriers that can prevent economic advancement, regardless of individual qualifications or business acumen. Robinson begins hosting monthly business development seminars at his store, teaching commercial lending procedures, banking relationships, and legal rights that can help other entrepreneurs navigate financial institutions and secure necessary capital for business expansion. His lending rights victory becomes template for challenging discriminatory banking practices throughout Detroit, as other business owners learn to document loan applications, demand objective evaluation criteria, and appeal discriminatory decisions through institutional oversight mechanisms. The Detroit chapter of the National Association for the Advancement of Colored People establishes a business development committee that uses Robinson's experience to train entrepreneurs about commercial lending rights and strategies for overcoming institutional discrimination. Local colleges begin inviting Robinson to speak about business development, commercial finance, and economic empowerment, sharing his experience with students who aspire to entrepreneurial success despite institutional barriers that can complicate business development. Corporate partnerships develop as Robinson's business success attracts attention from major suppliers, distributors, and franchise opportunities that recognize the economic potential of Detroit's growing Black middle-class market. Banking relationships improve as First National Bank, responding to federal oversight and legal liability concerns, implements training programs for loan officers about fair lending compliance and objective evaluation criteria that prevent discriminatory commercial credit decisions. The Michigan Banking Association begins using Robinson's case in professional development programs, teaching commercial lending officers about legal requirements, institutional liability risks, and proper application of credit evaluation standards. Federal banking regulators established Detroit as a pilot city for fair lending enforcement programs, monitoring commercial credit patterns and investigating discriminatory practices that violate equal opportunity laws and create legal liability for financial institutions. Academic researchers begin studying Robinson's lending case as an example of successful challenge to institutional discrimination, documenting strategies and outcomes that can inform policy development and legal advocacy efforts. Business school case studies incorporate Robinson's experience into curricula about commercial finance, institutional discrimination, and legal frameworks that protect equal opportunity in business development and commercial credit access. Corporate diversity training programs begin including commercial lending equality components that use Robinson's experience to demonstrate ongoing relevance of fair treatment principles in financial services and business relationships. Community development organizations use Robinson's story to encourage business formation and entrepreneurial activity, showing how discriminatory barriers can be overcome through proper preparation, legal knowledge, and strategic use of institutional oversight. The psychological impact on Detroit's business community proves lasting when Robinson's success demonstrates that commercial achievement requires both individual capability and systemic challenge to institutional barriers that can prevent economic advancement. Regional economic development improves as Robinson's experience encourages other entrepreneurs to pursue business formation, commercial lending, and expansion opportunities that contribute to job creation and community development throughout southeastern Michigan. The ripple effects extend to other cities as civil rights organizations share Robinson's lending challenge strategies with business development programs across the Midwest, creating a regional movement for fair commercial credit access. International business observers begin studying American commercial lending discrimination as an example of how institutional barriers can undermine economic development, using Robinson's case to illustrate both problems and solutions in equal opportunity enforcement. Legislative advocacy increases as Robinson's experience provides concrete example of lending discrimination that lawmakers can use to support fair lending enforcement legislation and banking regulation that ensures equal treatment for all qualified applicants. The broader democratic impact extends beyond commercial lending to systemic questions about economic opportunity and institutional barriers that can prevent business development regardless of individual qualifications or community need for commercial services.
Robinson's retail business continues operating successfully for 12 years, employing dozens of Detroit residents, serving thousands of customers, and generating substantial tax revenue that supports municipal services and community development throughout the city. When Robinson eventually sells the business to focus on other ventures, the new owners maintain employment practices, community relationships, and economic contributions that validate the original commercial lending decision and demonstrate successful business development outcomes. The building itself becomes a symbol of economic empowerment and institutional change, housing successive Black-owned businesses that serve community needs and provide employment opportunities throughout Detroit's economic transformation during the 1960s and 1970s. Federal fair lending legislation enacted in the late 1960s specifically references cases like Robinson's as justification for stronger enforcement mechanisms and clearer legal standards that prevent discriminatory commercial credit evaluation based on demographic rather than financial considerations.
Banking industry associations establish best practices guidelines for commercial lending that incorporate lessons from Robinson's case, emphasizing objective evaluation criteria and institutional oversight that ensures equal treatment while maintaining legitimate credit standards. Law schools begin teaching Robinson's lending case as example of successful civil rights litigation strategy, showing how individual challenges to institutional discrimination can create broader policy changes and legal precedents that benefit entire communities. Economic historians document Robinson's commercial lending experience as an important milestone in post-war business development, connecting individual achievement to broader patterns of economic integration and institutional change during the civil rights era. The lasting impact of Robinson's banking confrontation continues influencing commercial lending policy decades later. His experience becomes foundational case study for understanding how individual business courage can protect commercial credit access against institutional barriers designed to limit economic opportunity. Legal scholars continue referencing the Robinson lending precedent in contemporary discussions about commercial credit discrimination, small business development, and the importance of objective evaluation criteria that prevent discriminatory assessment while maintaining financial prudence. Robinson understood something powerful during those 3 hours at First National Bank. Sometimes the most important fights aren't in boxing rings or entertainment venues. They're in banking offices, where commercial opportunity gets rationed by institutional policies rather than business merit. The victory proved that commercial success requires both individual preparation and systematic challenge to discriminatory practices that can prevent business development regardless of personal qualifications or community economic need. Think about business lending in your community today. Banking institutions, evaluation procedures, credit assessment policies that claim financial prudence while creating barriers for qualified entrepreneurs based on demographic assumptions rather than objective business criteria. Because 3 hours of defending commercial credit rights can strengthen business opportunity forever, can prove that economic development depends on equal access rather than discriminatory evaluation that undermines entrepreneurial achievement and community development. Robinson demonstrated that American business opportunity belongs to everyone qualified to participate when financial institutions choose merit-based evaluation over demographic discrimination that threatens economic advancement for all citizens seeking legitimate business development. The property development project that Robinson financed with his hard-won bank loan transforms not just his own business portfolio, but the entire Grand River Avenue commercial district. His successful retail operation attracts other entrepreneurs, creating economic momentum that revitalizes previously neglected urban areas. Within 2 years of Robinson's store opening, the surrounding blocks attract 5 additional Black-owned businesses: a restaurant, barbershop, insurance office, medical clinic, and auto repair shop. This commercial development creates employment for over 60 residents and establishes the area as a thriving business district. The economic success validates Robinson's original business vision, while demonstrating how individual commercial achievement can catalyze broader community development when entrepreneurs receive equal access to commercial credit and institutional support for legitimate business ventures. City planning officials begin citing Robinson's commercial district as model for urban development that combines private enterprise with community investment, showing how business success and neighborhood improvement can reinforce each other when supported by appropriate financing and institutional cooperation. The success story attracts attention from national business publications, urban planning journals, and civil rights organizations studying economic development strategies that can create both individual prosperity and community benefit through a systematic approach to business formation and commercial lending. Economic development agencies begin using Robinson's experience as a template for encouraging business formation in other urban areas, providing technical assistance, loan preparation guidance, and advocacy support that helps entrepreneurs navigate institutional barriers to commercial credit access. University business programs establish case study curricula around Robinson's commercial lending challenge and subsequent business success, teaching students about discrimination, institutional change, and strategies for overcoming barriers to economic opportunity through preparation and persistence. The Federal Small Business Administration begins monitoring commercial lending patterns in Detroit and other major cities, using Robinson's experience as a baseline for identifying discriminatory practices and developing enforcement mechanisms that ensure equal opportunity in business development finance. Banking industry reforms accelerate as Robinson's case demonstrates legal liability risks associated with discriminatory lending practices, encouraging financial institutions to implement objective evaluation criteria and oversight procedures that protect both borrower rights and institutional compliance. Community organizing efforts expand as Robinson's success proves that individual challenges to institutional discrimination can create broader systemic changes that benefit entire communities through improved access to commercial credit and business development opportunities. The psychological impact extends beyond Detroit's business community to national conversations about economic opportunity, institutional barriers, and strategies for ensuring that business development remains accessible to qualified entrepreneurs regardless of demographic characteristics. Robinson's lending victory becomes a symbol of broader civil rights progress in the economic sphere, demonstrating that business opportunity and commercial credit access represent fundamental aspects of equal citizenship that require active protection through legal advocacy and institutional oversight. Years later, when federal fair lending legislation faces political challenges, Robinson's experience provides concrete example of discrimination and successful remedy that lawmakers and advocates use to defend commercial credit protection laws and enforcement mechanisms. The store's eventual sale generates substantial profit for Robinson, validating both his business acumen and the lending decision that initially faced discriminatory resistance. The successful transaction demonstrates how equal access to commercial credit can create wealth-building opportunities that benefit both individuals and communities. Legal precedent established by Robinson's challenge continues influencing commercial lending litigation for decades, as attorneys reference his case in arguments about discriminatory evaluation, institutional liability, and proper application of objective credit criteria in business loan decisions. The lasting institutional changes prove most significant, as Robinson's experience contributes to banking industry transformation that prioritizes creditworthiness over demographic considerations in commercial lending decisions, creating more equitable access to business development capital for all qualified entrepreneurs. Robinson proved that persistence, preparation, and strategic challenge to institutional discrimination can overcome barriers to business development, creating opportunities not just for individual success, but for broader community economic advancement and systemic institutional reform that benefit future generations.